Hello and welcome again to Money Tips. This is Charles Kelly. Well, there's been a lot happening this week in the news with mortgage rates in particular, but some of the mortgage rates are now reaching over 6%. And this comes on top of the news that OPEC, that these are the major oil producers, most of the Middle East, they are planning to cut their production by up to 2 million barrels a day. Now that's going to put further pressure on oil prices for the West. Now, when I say the West, this doesn't really include America, because America could be virtually self-sufficient for oil if they wanted to, if they weren't going down this green route that they've been going down. But for everyone else, it's going to be a tough time coming into winter with bills already very high. But it's mortgages I want to concentrate on today and show you just how much mortgage rates have risen. Now, this comes on the back of interest rates going up, that the 0.5% rise by the Bank of England that we talked about a week ago. Many of my listeners would have been listening to me and watching me over the last year, predicting that rates were going to go higher, because I think we've all got used to these low interest rates. There's this 2 and 1 and 2% mortgage rates, which have never existed in my lifetime, and I'm not sure I'll ever see it again. These were artificially low rates. In my lifetime, interest rates have been around 6-7%, not around 2 and 3%. So we've had a good run on this, but that time seems to be coming to an end. So the Bank of England raised interest rates. Then we had the mini budget where Kwasi Kwarteng announced a lot of measures to boost spending, and the city didn't like it, and the pound then plunged by around 15%. Almost reached parity with the dollar. So the Bank of England now are going to be forced to keep rates high to keep up with America, who are putting rates up and slowing their economy down. And so the Bank of England will have to respond to that and keep rates going up. Now, they were going to put rates up anyway, probably because they have an inflation target of 2%, and we're already 5 times over that now. I think it's a very difficult target to reach, and it's going to put a lot of pain on people, the average person in the street that doesn't earn £500,000 a year like the governor of the Bank of England. So the average person really will be squeezed by these interest rates in the battle to curb inflation. But let's have a look at just how much interest rates have gone up here. We see here that looking at the chart here, because this illustrates it better than me talking about it, but this chart will show you that average interest rates, these are on 2 and 5 year deals. Now, you might get cheaper than that from a good broker, depending on how much deposit you're going to put down, your income status, and all the rest of it. But you can see that just back as far as 2021, interest rates for a 2-year fix were just over 2%, and not that much higher, 2.5%. For a 5-year fix. Then you saw that by September of this year, those rates had jumped to 4.5%, getting on for 5%. Similar kind of rates, actually. I mean, most people, I don't know why they would go for a 2% fixed when a 5-year is not that much more expensive, unless the fees are very high. But now we see that by October, this is after the last rate rise, we see rates creeping above 6%. And that's a lot. That's nearly getting on for on the 2-year deal. It's nearly 3 times. It's gone up by 300% compared to before. So if you were a new borrower, you're going to be faced with these rates. If you're a borrower coming off the back of an expired 2-year deal from 2020, you're going to go back to your lender and say, well, I want to refix, and they'll say, well, it's now gone from 2% ish to nearly 6%. That's a big jump in your payments. It's a shock to the system, let's face it, for anybody. I know most borrowers are on fixed rates, and the people I talk to, the people I've been helping, I've normally got 5-year fixed rates, but a lot of people are not, particularly people who've bought their properties, maybe 3-4 years ago, and they're coming to the end of their deals, and that they are going to have to decide whether or not to come out of their existing deal and pay a penalty to go onto a rate before rates go up, or sit it out and wait and see what happens. But rates are predicted to go even higher than this because, as I was saying last week, many economists expect base rates, that's not the mortgage rate, that's the base Bank of England rate, to go above 4.5% by next year. And then the banks add on their margins, which have increased over the last few years. The banks have been very greedy. The banks used to put on a margin on top of the base rate of between 1.5% and 2%. Now they're regularly sticking on 3% on top of their the Bank of England base rate. So at the moment, if they're charging 6% here for a deal, the Bank of England base rate is only just over 2%, and they're really ramping it up here. And this is pure greed, particularly when you can see that the banks get a lot of their money from depositors. Depositors put money in banks, they lend the money to the banks, and the banks then lend it out at higher rates. Well, a lot of depositors are sitting on getting interest rates of just less than 1%, and the banks are lending that out at 6 times that. And in some cases, it's probably more like 12 or 20 times the amount they're paying the depositors. So again, it's pure greed on behalf of the banks. They're not really doing us any favors. And I hope that if the market slows down, the banks will be then forced to come back to more civilized interest rates. Now, how would this affect you? How high could things go? Well, we don't know exactly how high they're going to go, but look how much your mortgage could cost each month based on these rates. Now, based on £100,000 deal here, you can see you would have been paying around £424 a month. If that goes to 4%, that's 528. That's up another £100 per month, or 25% increase on what you were paying. Now, if you think 10% inflation, you think your bill's going up. This is a 25% rise. And if it goes to 6%, then you're looking at £644 a month. That's £220 extra per month, or roughly 50% more than you were paying previously. And as you go through the various rates here, 200. I mean, a typical average mortgage in the country is around 200,000. So their payments could go up between from around 800 to 1,000 for a 4% fixed, to even £1,200 a month or a 6% fixed. And that's again a 50% jump, another £441 a month. And if you've got bigger, chunkier mortgages like 300,000-400,000, you can see your payments going up by up to £666 a month, £661 a month, or even up by £800 a month. If you look at that, £800 a month, that's it's just an horrendous. That's the same as borrowing £200,000 at 2%. So that's a big jump by anybody's imagination, by any budget, even if you're earning quite good salaries. And then if this comes on top of maybe one of you losing a job, or one of you having a salary cut, or you're also coping with the bills on top of that, a lot of people are going to get into trouble based on this. Now, these are for residential mortgages, and it's a repayment mortgages. I'm not talking about buy-to-lets here, but buy-to-let landlords, I would imagine, are going to suffer similar fates, because it's just the way it is. And a lot of buy-to-let landlords, if you had a mortgage on one of these, say you had a 300,000 buy-to-let mortgage, and you said you're going to then face with a 666 pounds a month extra. Can you go back to your tenant and increase the rent by £600 a month? No, of course you can't. And if it was a bigger mortgage, like a £400,000 mortgage on, say, £500,000 property, that would rent out for, say, I don't know, £1,800 a month. Now, based on a mortgage where you were only paying £1,600 a month, or if it was interest only, you'd be paying less than that. Now your mortgage on a repayment basis could go up to £2,500 a month. That's not even going to be covered by the rent payment. Yeah, I mean, you could have just an interest only, of course. Then it would be a lot cheaper. But what's 6 4 what 24 2,000? Yeah, I mean, on an interest only, you could manage it. But if your mortgage is repayment, you're going to be struggling as a buy-to-let landlord with that sort of rent payment. Okay, so that's what's happening there now. Talking about rents, in Scotland, there's a bill going through to freeze rents until next year. And a lot of people in Scotland are worried about this. A lot of landlords are worried that if rents are freezed while all their payments are going up, they're going to be squeezed. Obviously, the government, which is a socialist government, MSP in Scotland, sorry, not SNP in Scotland, then they are protecting the tenants. But in protecting the tenants, what are they doing? Perhaps they are maybe pushing landlords away, and then you could end up with less properties on the market and then rents going up. And it looks like rents have already gone up by around 30% in the last year in Scotland, perhaps in anticipation of these rent freezes and basically anti-landlord legislation. And I don't know if they've applied the same freeze to council tenants, but obviously council rents are lower. But certainly for private landlords, there's definitely this attack on landlords. So what will happen in Scotland? I don't know. I don't know much about the Scottish market. I expect landlords will try and sit it out. Not every landlord will get out of the market, but faced with higher interest rates, higher costs, mortgage costs, and then fixed rents that they can't even put up, what can they do? They may be forced to say, well, I'm going to sell. And if they have to sell during a downturn in the market, then that's when they could lose out because they're not selling at the optimum time. And even when you try and sell an investment property, you then have to, of course, actually get a vacant possession, because most people won't buy a property with a tenant in there. So you have to then get vacant possession, and that means that you could take 6 months or a year asking the tenant to leave or evicting the tenant to sell your property. And by that time, who knows what's going to happen. So you could have a long, lengthy process in trying to sell an investment property. I've been through this process myself. So what can you do? I mean, all of us, whether you're a landlord, a tenant, just generally somebody working and paying bills, you've got to really learn how to manage your money, to cut back on the things maybe you don't need. And the first step of that is to get control of your finances. So I'm offering some free training, which you can find on the description, to help you get control of your finances within 28 days or less even. And that will give you, it's a free 1.5 hour webinar to show you some of the ideas I have to help you get control of your finances. I'm not going to go through them all here. And then if you're really serious and you really need some help and you're not managing your finances properly, then check out the link to book a free wealth discovery call with me, which I can probably do now sometime next week. I've got a few slots open for that. So check that out, and I will speak to you again soon. In the meantime, just try and get to grips with your finances and know what's coming in and what's going out. Because if you can't measure it, then you can't improve it, as Peter Drucker said. So in the meantime, stay safe out there. This is Charles Kelly, bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. And do check out my book. I have a little plug there for Borrow and Grow Rich, which is now available on Audible as a downloadable audio book on Audible. So that's a super app if you haven't got Audible. I think you pay £6, £7 or £8 a month, and then you can download one audio book a month, and you get often deals and 2-for-1 offers and that sort of thing. So that has really helped change my life and helped me get through a lot more books by having Audible as an app. They're part of Amazon now, by the way. So thanks for listening, and have a great day wherever you are. Thank you. Bye for now.